Hello, and welcome to Investment Insights. I'm Ebru Sofoğlu, Head of Content at ETF Stream, and today we will be diving into CLO ETFs, which has been an exciting area for investors. For this discussion, I'm delighted to be joined by Andy Baker, who is the Head of EMEA ETF Capital Markets at Janus Henderson Investors, and Matt Holden, Head of ETF Trading Europe at RBC Capital Markets. Andy, Matt, thank you for joining us today.
Thank you.
Andy, I'll come to you first. So CLOs are often labeled less liquid. Why do you think this perception exists?
It's a very good question. I think if we look back at the history of CLOs, most of it points to GFC. I think the misconception around the liquidity profile with CLOs around that period and the role that CLOs played in the GFC is misguided. Zero defaults in AAA CLOs during GFC, zero defaults in AAA CLOs since. So I think that's probably testament to the asset class itself. I think also if we look at the assets in isolation, I think what's very, very clear to us is that when you look at the investment management process and the securitization rules in Europe, you need an investment manager with the expertise to manage CLOs. And then finally, when we look at electronification of markets, CLOs historically have traded OTC or on voice, and they're still probably a few years away from where we see RFQ markets and more traditional Euro credit lines.
And Matt, how should investors think about on-screen liquidity versus liquidity behind the CLO, real liquidity?
The way to approach it is, in essence, how sort of all the ETFs work. You're purchasing via the ETF a portfolio of CLOs. If you look at the concept of trading the ETF versus the basket of CLOs, there's more liquidity in the process that you're trading a single instrument. So there's a centralization of the liquidity at that point. So if an investor was to come along and to purchase one or two sort of CLOs in isolation, they would have to find a buyer or seller for those exact CLOs. What the ETF does is it presents a benchmarking or an indexing sort of way of trading and a centralization of the trading. And so an investor that is potentially holding the ETF that is a seller on the day that you're a buyer, it's a much easier match for that process. So that is a key concept in any ETF, but more so with the CLO market at the moment. And then also, again, as Andy alluded to, there's the electronification of the trading and the anonymity of the trading. So you don't necessarily have to call a CLO desk in order to transact. You can actually approach the market in anonymity to buy or sell the ETF itself.
So Matt, why do CLO ETFs sometimes appear less liquid on screen than they actually are?
So that's a process of the exchanges themselves. If we're talking about sort of the European market, it's a fairly fragmented ETF market. There are several exchanges that you can trade the same ETF on, and so there may be volume trading on one exchange and not on another exchange that you're looking at the time that you're trading. So that's one key concept. Also in Europe, there is a large proportion of the trading in ETFs is in the OTC market or via RFQ platforms. If you look at the European market, it sits at about a 70%, 30% split in terms of OTC trading versus on-screen trading, as opposed to maybe the US market where it's the reverse of that. But essentially, an investor's actually looking at volume traded. It doesn't necessarily translate to the volume that is available on screen. And what we find in a lot of cases, especially in the European ETF market, is that there is hidden volume in the screen that's available. And so investors that go and test the screens with larger size orders are often quite surprised at how much liquidity sits in waiting in those exchanges at the time.